Okay, we have started. How you doing, Greg?
Good, my friend. We meet again.
We meet again. We meet again. We've got people trickling in right now. I want to welcome everyone. I'm seeing at least we're already up over 10 attendees, and the number keeps going up. We see Ashley Hatton, Doug Chase, Hien Wen, John Avila, Linda Evans, Michael Foster, Miriam Casales, Paul Graham, Wally Conway. We got a bunch of people just
All
trickling in
right.
here. Happy to have you on a Tuesday afternoon. This is our Tuesday afternoon educational series that we will be hosting every Tuesdays at 12:30 with co-founder of JWB, Greg Cohen. Greg, say hi before I get into a little bit of housekeeping.
Welcome, everybody. So glad to have you here on a Tuesday. I know, Thursdays were fun. We're still doing Thursdays, but, if I could wrangle Pablo to sit down with me and allow me to share some thoughts on a Tuesdays, I figured, why the hell not? So we're going to have a lot of fun with these Tuesday educational series as well.
This is going to be fun. And, it's just a little bit of a tactic change. We put a poll inside of our Facebook group, which if you haven't joined yet, I highly recommend. Go to jwbrealestatecapital.com/group, and that'll take you to our Facebook group. We have over 1,000 members in there of clients, people in our network. We talk all JWB things and rental investing and financial independence. And we put a poll in there asking what kind of content does everybody want? And a astounding answer was that people wanted financial education. So we are answering. That's why we have that group, so that we can serve the JWB network, the family, the team, the clients, which are all the same thing to us, right? So that is what we're doing on these Tuesday calls every Tuesday afternoon at 12:30. If you want to book a call with anybody, with our sales team at JWB to talk you through what adding rental property investing to your portfolio would look like, we made it super easy. Go to chatwithjwb.com, fill out your information, and you can directly go in there and book a calendar appointment so that we can do our typical client demo that shows you how rental income property would perform inside your portfolio and get to know you a little bit better so we can serve you. So now.
I've added both of those things for you, man. I've been hard at work in the background, so I added both of those links to the chat box, so it's there for you, brother.
Great.
Later.
And I'm glad you bring up the chat box. There is, if you look below on the bottom of your screen, you'll find a chat box and you find a Q&A. We ask that if you have any questions today during the presentation, to put them into the Q&A. And one more ask is that you put your name in there. So that way, if we don't get to your question, we can have somebody reach out to you personally with the answer. And anything that we don't get to today, we'll reach out to you and we'll address it on our Thursday Q&A calls that we also do if you want to join us then as well. And as you know, we're going to repurpose this content, make it as easy to consume as possible. You'll get to see it on our social media links. But for right now, all you need to remember is if you want to book an appointment to go over how this thing looks in your portfolio, go to chatwithjwb.com. If you want to join us in our Facebook group where all the cool kids hang out, it's jwbrealestatecapital.com/group. And now, without further ado, I get to introduce the topic du jour, what everyone is talking about, right? It is, how do we invest in the time of coronavirus? And Greg, I know that we went on a run this morning. We've talked about all the research you've been doing. You've prepared a nice big presentation. I think everybody's going to get a ton of value. So without further ado, I would like to put the speaker on, Greg Cohen, co-founder of JWB.
Yeah, well, and hopefully, this is meant to be really sort of an informal discussion with everybody. Would love for as much interaction as you guys would like. Throw your comments in the chat box. It gets kind of lonely sometimes when you're doing these webinars, and it's just Pablo and I up here. So feel free to throw your comments in there. And of course, we're here for you as a resource. So your questions mean a lot.
You said the chat box. We want them to throw the comments in the Q&A box. Let's just keep
There we go. Well,
it consistent.
Yes. Questions for sure. Anything that we can follow up with, Q&A box. You're right. Whoa. So, all right, now that we're into this. So I've been spending a lot of time thinking about, if I have $1 right now, where am I going to invest and I think that we can learn a lot now that coronavirus has been upon us. We all have a good understanding of the long road that we have ahead of us. And a lot has happened in the investing markets, and different asset classes have reacted differently. And so what I wanted to do is to do a deep dive and did a lot of research to see where money has been flowing. Because I think we can learn a lot about that. We can learn a lot about what people value in a time like this. And then the focus of this call is about, for those of you who have that next dollar and you're thinking about where to invest, let's look at the different options that you have and see how they stack up, right? So I think that's really what I want to get into today. I mean, obviously, we know that coronavirus is a tough situation for everyone. We certainly don't want to make light of it. And we all need to be focusing on taking care of our families. And, reserves are important at a time like this. But this is really a talk, at some point we're going to have to figure out how to invest again, right? And this is a talk that's designed to help those who may be at that point right now, maybe getting to that point in the coming weeks and months. And it's about those alternatives that you have and seeing how they stack up. So you ready to jump into it, Pablo?
I'm ready to jump in. I showed the title slide a little while ago, and I think we're ready to get into what you think is important to investors, right?
All right. You sound like you have a little bit of trepidation there, Pablo. Are you afraid of what I'm going to say?
I'm never afraid of what you say. I trust you wholeheartedly, Greg.
Well, all right. So let's kind of just frame this out. If you are an investor, what are the things that are important to you? So I listed the things that are important to me, and I'm sure they'll sound very familiar to you. What's important? Number one, you're looking for a high floor or consistency, right? You're looking for monthly income is important. You're looking for upside. You're looking for the ability to use inexpensive leverage. This is something that you may not have thought of, but it should be really important. Savvy investors know how important inexpensive, easy to acquire leverage is. So that's a decision-making point if you're thinking about where to spend or where to invest your next dollar. Tax savings and ease of use. What do we mean by ease of use, Paulo?
I believe that you mean that in the past, investing in rental property income seemed really, really complicated. And therefore, people kind of put it aside as a different asset class that is not available to the masses, while stocks, bonds, all that other stuff, we're more used to buying that with in a retail kind of environment. Yeah.
I mean, it's the reason why we are sort of we're countercultural in this group, right? We talk a lot about rental property investing. We talk about private lending. The reason why this is not so widely accepted out there is because it's so darn easy to invest in the stock market, right? It's so darn easy to invest in stocks and bonds. And that's why everybody does it. But, obviously what we're going to talk about here are some of the things you might be giving up. And the number one, by only investing in those asset classes. And the number one reason why people only invest in those classes is because of the ease of use, how easy it is. So with rental properties, as many of you know, with JWB, our number one goal is to make rental properties as easy as it is the stock market. But, if we're just thinking about what's important to investors, it's those factors right there. Consistency or a high floor, right? Monthly income, upside, tax savings, leverage, and ease of use. That pretty much spans the choices that you're making and why you're making those choices. So we're going to use that as the backdrop against what these asset classes have actually done. So now you ready to get in some numbers, Pablo?
I'm ready to get into some numbers.
So this is what I was doing all last night in preparation for our call, and why I kept my wife up to some ungodly hour, because I wanted to have the most recent numbers here when we're looking at the different asset classes. Because I think it matters. Again, what we're talking about is what are the droves of money moving to, and why are they doing that? First two we're going to take a look at are stocks and oil. All right. Stocks and oil are more opportunistic plays, right? People generally go to the stock market and invest in equities because they're looking for upside, right? And they don't always get that consistency, as we now know, because of what we've seen in the stock market for the last 6 weeks or so. So I pulled some numbers here. The January 1 open. I wanted to look at this and say, okay, pre-coronavirus time, right? Beginning of the year to date, how have we performed? Because that is a really telling measure. And where is money flowing? So I pulled the Dow Jones, right? We opened at just under 29,000. We reached an all-time high in the Dow at 29,551 points, I believe on February 12th or right around there. What do you see for the low there, Pablo?
I see it low to quite low in comparison to that high.
Yeah.
A solid 11,000 points below. close.
I mean, it has been, and for those who are investing in the stock market, I feel for you. It has been a lot of pain that you have endured, and a lot of variability, and it affects people on a real basis, right? When you lose 37% from peak to trough in about 6 weeks, you know what that means? That means that when you, as a grandparent, were thinking about retiring, right, and spending more time with your family, maybe now you need to work longer, right? I mean, and it's heartbreaking. So the stock market obviously has a lot of variability. People go there for the upside over the long haul, but on an individual month, quarter, even yearly basis, it has more variability than other asset classes. We've rebounded a little bit. The April 6th close was 22,679 points. So for a year-to-date change, if you're in the Dow Jones Industrial Average, you're down 21%. The conclusion here, variability, and people are not investing in the stock market when times are tough. When the world is on fire, stock market generally takes a beating. All right, let's talk about oil prices now. For anybody who's been investing in oil prices over the past quarter here, your mind is probably blown right now. Have you been paying attention, Fala?
Not really. I'm such an avid environmentalist that I wouldn't invest in oil anyways, so I don't really track it. Right. I did notice that the gas prices at the pump are ridiculously low.
They are, which is nice when you're getting gas. But for those oil companies and for really investors overall who like to make decisions based on solid fundamentals of supply and demand, your mind is blown right now, right? Because what you've got is you've got a couple of world leaders out there that are having an argument, and they're really getting in a race to the bottom. They're not paying attention to normal supply and demand. They're trying to gain market share and increasing oil production to the detriment of the others. And so what's happening, and the biggest takeaway here is that it's not based on fundamentals. That scares the hell out of me, right? It's based on what a few world leaders are thinking. It's probably the world leaders you don't necessarily want to put your thoughts, money, and trust with.
Not my favorite world leaders.
No, not at all. Not at all. So it's having a dramatic impact on those investors who invested in oil. And so looking again at the numbers here, started at $61 a barrel in January 1, went down to as low as 20. We had a slight rebound last week when, these world leaders were out there talking somewhat positively about this. But year to date, you're down almost 60%. Again, let's look at where the money is flowing. In times of chaos, right, money is not flowing to oil right now, especially when you've got weird decisions that are being made by world leaders there. So it's safe to assume that in this environment that we have seen in the coronavirus economy, money is not flowing to stocks, money is not flowing to oil. Does that make sense?
That makes a lot of sense. And I know we're about to get into a couple of other asset classes, but Azeem Sattar had a question in the chat that we're going to get to. Azeem, right? He's asking what are the best investments in Jacksonville, price points and offerings in current times by JWB. That we will definitely talk about on this call. So I just want to keep him encouraged. And Azeem, if you want a personalized evaluation of what that would work for you, I would encourage you to go to chatwithjwb.com, set up an appointment, have somebody personally walk you through it and tell you what are the best investments for you.
Absolutely.
Yeah.
And so, and thank you, Azeem. I'm sorry, what was the name again?
Azeem Sattar.
Azeem. All right. I want to remember that one. Thank you, Azeem. We'll certainly get in touch with you for sure there. So we've kind of taken stocks and oil off the table. If you're an investor now and you're thinking about potentially investing in rental properties, probably not comparing that with the stock market. Like that money in your mind, you're looking for something that is more preservation of capital. It's more consistent than oil and stocks. It's not really a competition for your dollars, right? But what is in competition for your dollars may be things that are safe havens when the world's on fire, right? Safe havens are things like gold, bonds are typically your two safe haven investment asset classes. Generally do well in times of chaos. So let's take a look. Let's put those numbers up here and see how gold has done and bonds. And again, we're seeing the flow of money and we're trying to decide what we can do with our next dollar. What's the best use for our next dollar? We're going to focus on those preservation of capital asset classes. So people generally go to gold when they think the world's on fire, right? And that's because it's a store of value. It's less about upside for gold. It's more about how do I maintain my value and sort of be in a sense where if we expect bad things to happen for the economy, gold generally has a nice run for you. So beginning of the year, we started at $1,521 an ounce for gold. As of April 6th, yesterday, we actually closed at the high of $1,707. So you've seen a 12% increase in gold. Again, money's flowing to the safe investment classes, okay? Now, there is certainly a place for gold, bonds, rental properties. We're going to talk all about this. But if you're a gold investor, it would be reasonable to assume that if you generally do better in gold, what you've experienced over the past 6 weeks with coronavirus has been a recipe for success for a gold investment. Wouldn't you agree?
Sounds like it.
You know, the dynamics of the world right now, people are very scared, and money is running to a safe haven. So if you're thinking about what to invest with your next dollar, right, gold may continue to be a part of your portfolio, but it would be, in my opinion, it's not realistic to assume that gold is going to continue on this pace forever, because we do know that at some point the economy is going to recover. And generally when the economy recovers, gold doesn't appreciate at the same rate, right? You would expect it to level off, or maybe even go down, right?
So gold doesn't tend to lose value, right? It just doesn't appreciate very much, except for when there's these like runs of the world is in chaos, correct?
Yeah, I mean, it can lose value, but it's more of a store of value. It's preservation of capital. It is better than putting it under my mattress.
Sure.
Right?
And what about when you talked about ease of purchase and sale? Is gold as easy to buy as stocks or bonds and stuff like that?
Absolutely.
Okay.
Ease of purchase is another reason why investors who are looking for a safe haven go to gold.
Okay.
Absolutely. So let's take a look at bonds now. So bonds are, the best way to look at bonds is to evaluate them based on the 10-year treasury note, right? There's different types of bonds. There are shorter term bonds, there's term bonds. I pulled the 10-year treasuries. And basically with bonds, what you're looking at are the yields that are offered, which is basically the interest paid on the bond to a bondholder. And yields are inversely related to prices. So when I'm looking at the numbers here, when you're looking at the numbers here, the 10-year treasury opened January 1 with a 1.88% yield, right? Since then, let's call it the world has been on fire and people have been looking for a safe haven. And so what's actually happened is demand has gone up tremendously for bonds. And at the same time, the Fed has lowered interest rates for the Fed funds rate, which instantly decreases the yield for other similar assets. And so it brings down the yield for bonds. So what this means is that January 1, if you put your money in on a 10-year note, you were comfortable earning a 1.88% return each year in the form of income from the bond. Does that seem like a high rate of return for you, Pablo?
I am no economist, but that seems lower than inflation.
Hard to get to financial independence earning 1.88%. Generally speaking, people agree that inflation generally happens at 3% a year. So January 1, before the world melted down in essence, right? You were going there for preservation of capital. Now, if you pull that stat back up there, right? 0.6 is the yield as of April 6th?
As of April 6th, 0.68.
0.68. That's a third of the yield that you were requiring to put your money in for 10 years, right? Scared money has run to bonds. Now, what this has meant is that the prices of bonds are inversely related to yields. And so prices of bonds have actually gone up because of this. But if we're talking about where is your best dollar spent and you want to make significant returns, there's not, a 0.68% yield is not a whole lot, right? You're actually losing money against inflation. And there's not a whole lot of upside at this point for bonds, specifically because yields have come so far down. There's not that much lower for them to go in order for your prices to go up. So while these have been safe havens, if you're thinking about where to invest your next dollar, you're not looking for significant upside in either the gold or the bonds market. All right.
Sure. So a couple of questions for you. Would there be upside so we're assuming that there's no upside in gold. because it feels like the world has gone through the coronavirus crisis. We're kind of like at peak crisis level right now. And this week, at least that's what the World Health Organization is telling us, or the authorities are telling us. Let's hope. And we're probably going to flatten out, and the world's getting used to what this is. And all the other countries have kind of gone through that. Therefore, we believe the madness is behind us. If we're way off about this, right? Like if there was still another 6 months of increasing deaths and all the stuff we don't want to hear, then maybe gold does have more upside, correct?
Well, you're definitely right there. And I don't want to come off as there's no upside for bonds and no upside for gold. But comparing that to the upside it had January 1, there's less of it.
Correct.
Right? And the purpose here is not to try to take the angle that rental properties are a panacea and will solve all of your safe haven types of investments. But what we're going to see here is, especially in the next slide, is that there are a lot of advantages that rental properties have compared to gold, compared to bonds, that people just don't even consider. They never considered it because it was a hard asset. It was a hard asset to invest in, right? So specifically to your question, there may be upside. Even if the world doesn't continue to go in this negative phase, you could continue to see appreciation in both bonds and gold. Mm-hmm. There probably still is a place for both of those in an investor's portfolio, but it shouldn't be only those two, especially when you look at some of the comparisons to what rental property investing can do for you in a time like this.
Understood.
Does that make sense?
Yeah. That makes sense. I wanted to clear up the upside on gold is somewhat existent depending on a couple of different things. But the main point is that the big upside in gold is when the world lights the match, and the match has been lit already. We already got the smoke detectors went off. We're kind of fire extinguishing, right? I can continue this metaphor for an hour, but I won't.
There you go.
And then the last thing I wanted to ask you was kind of what's the difference between the yield of a bond and the price of a bond? I'm not super clear on that.
Yeah, so the yield is inversely related to the price. So if you think about it like this, to invest in a bond, basically you're trying to earn a set dollar amount with your money that you invest, and that's really what calculates the yield. So let's keep it easy. Let's say that you bought a bond for $100 and you wanted to earn $10 of interest on that bond. That would be a 10% yield. Right? So that's pretty easy to understand. Now, what happens when interest rates, let's say interest rates go up, okay? So now in the marketplace, you can earn 11% for a similar, all right? So that next investor who is gonna be able to earn 11% is not gonna pay $100 for that bond, right? Because if you wanted to earn $10 and you could earn 11% interest, you only had to actually pay $91 for that bond. So think about it in terms of how much real dollars you're trying to earn with the bond. And as your interest rate goes up, you actually have to pay less to earn that same dollar amount with the bond. And that's really, many people are not familiar with bonds overall, but, and listen, I'm not a bond expert, but that's generally how pricing works for bonds and how interest rates are related.
It's a good breakdown. I like it. I'm into
it.
So right now I just want to say, it looks like we're going to hit a half hour in about 6 minutes, at least according to the way we tell time here in the Western Hemisphere. So we're probably going to get into the slide that compares all these different asset classes. And we're probably not going to get to the part where we talk about the rental property profit centers. But I just want to encourage anybody, we're like this, we wanted to do an overall breakdown and see how far we could get. If you want to really understand the profit centers, if you really want a personalized breakdown of how this fits into your plans, again, really easy, go to chatwithjwb.com. I know that Mike and the guys are really good at breaking that stuff down. And I know that it's very much, your onboarding process is very much does this work for you? Or are you a fit for us? So you're going to get some good advice if that's what you're into. And if you want to continue this conversation after this, I just want to encourage everybody to come to our Facebook group. I love the Facebook group. I think it's awesome, where you can go to jwbrealestatecapital.com/group. So without further ado, I'll let you continue down this overall breakdown because I like this next slide.
Yeah, I love that. We'll do sort of a high level thing, and I think we'll get a little more granular, especially to answer Azeem's question there earlier about a specific asset there. So we'll talk about that, and we'll try to stay within the half-hour time commitment that we said here. So um, now let's go back in the head of somebody who's trying to think about where to invest their next dollar, right? Against the landscape of the things that are important. So if we want to bring that slide up here, and we're going to focus specifically on gold versus bonds versus rental properties.
We talked about how stocks and
Oil.
oil
I don't even
were
want to recognize it as
are
an
kind of
asset class.
are just nuts right now, right? Like if you want to be a day trader, you want to go play blackjack, go for it. If you're looking for long-term profits, these are the comparable, secure places to put your money right now.
These are the things that are competing for your dollars right now. Gold, bonds, rental properties. There's a number of other ones, but these are just the general, most readily accessible ones, right? So here against the things that are important to an investor, here's how they stack up. You know, a high floor. Gold, bonds, and rental properties all have a high floor. You know, Pablo, you and I were running this morning, and when we were talking about this, I said, you know, why aren't people investing in rental properties more often? We talked about a number of these concepts, and your answer surprised me. What was your answer?
Because of fear of not making rent from your tenant right now.
Mm-hmm. And that is a very timely fear. I'm sure some of the folks that are on the call right now have that fear as well. We need to have perspective. If you go back pre-coronavirus times, the rental rates and the ability to collect rent is it's been generally known as one of the most consistent ways to produce monthly income, you know, for many, many decades. It has been a solid asset class. Right now, people are a little concerned. I understand that fear. One other point that I wanted to make is that, you know, it's really interesting. We heard about this $2 trillion stimulus package that has been going on, right? There is not a more direct relationship from the stimulus package to an investor's perspective than that money going into your renter's hands so that they can pay rent. The government needs people to be able to pay rent, right? So as a big part of the stimulus package, they provided direct payments to individuals, which we've never done before. They provided huge unemployment, additional payments for those who are on unemployment to make sure that people can continue to pay their rent, can continue to pay their bills. You're not seeing stimulus packages going out to save people in other asset classes, right? In oil, in the stock market, right? But the government knows, and as an economy, we know how important housing is. And so, while, listen, there are some short-term temporary, you know, issues we're dealing with rent collection, the government's bailout is actually going directly to that pocketbook of that renter more than any other asset class, which should bring some calm. And at the same time, the numbers are coming out for April, and my feeling is that we are going to be positively surprised by rental income based on the numbers that I'm seeing.
Now everything's kind of uneven footing for all these other asset classes. You want to kind of break it down again?
Yeah, absolutely. So we talked about a high floor and consistency there. All of the asset classes have that. Monthly income, though, right? You don't get monthly income with gold, right? Do you like monthly income, Pablo?
I do. I tend to use my monthly income.
I like monthly income too, right? You do get income from bonds, generally paid twice a year, but we'll call that monthly income. It's just not a whole lot on a percentage basis, especially right now. You're earning 0.65%, I think it was, for the 10-year. You can compare that to a 7 to 9% return from rental income for rental properties. And of course, it comes in monthly for you. High upside, all right? So I'm talking about right now with your dollars that you're spending. We just talked about how the upside for both gold and bonds, a lot of that has been realized. Not to say that it can't go up anymore, right? Not to say that those are bad investments, but it's reasonable to assume that a lot of the upside has already been captured based on the market dynamics that have brought us here today. So from this point forward, not a high upside, especially compared to rental property investing, right? Rental property investing, the upside is the appreciation of the asset. And when you invest in a market like Jacksonville, which has historically appreciated at a rate of over 4%, higher than the national average, and you combine that with some of the elements of leverage, which we'll talk about in just a second, your upside can be quite significant, actually much higher than that 7 to 9% number that that I quote, because that 7 to 9% number is only based on rents, not on appreciation. Okay. Leverage is the next thing. Leverage is something that not enough people give a value to, but it's really hard to get leverage in other places than rental properties, right? In the stock market, in gold, you can do it by buying on margin, but that's not the same thing, right? We're talking about leverage. We're talking about the ability for you, Pablo, to buy a rental property and very easily apply for a loan, put 20 to 25% down, and get an extremely low interest rate for your mortgage. And that to be a 30-year mortgage, right? Nothing like that exists for any of those other asset classes. And the reason why that is so critical is because what I want you to do is, especially if you're holding on long-term, the effects of inflation are your best friend when it comes to rental properties, right? Inflation means that the value of goods and services around your asset go up over time. And when you take out leverage and you have a loan at like a 4% interest rate, that loan payment stays the same for the next 5 years, 10 years, 20 years, 30 years. But as the value of goods and services go up around rental income and home prices, it actually gets easier and easier for you to pay off this payment with those same dollars because of inflation over time. And so for a long-term buy and hold investor, inflation coupled with inexpensive leverage is such a huge asset, and you don't get those with the other asset classes, gold and bonds, like we were just talking about.
Interesting. And so I have to assume that with all this printing of money that we're doing, inflation has to be out there as another variable that should start to be taken into equation when it comes to all these different things, right?
Yeah, we've got a number of things to solve in the world, in the economy, and we're going to get through those first. Right now, the Fed is printing money to basically stabilize every part of the country and even the world, right? The Fed is buying debt from other countries right now because we are the currency of the world. That at some point will lead to inflation. But we're going to solve that problem as a country and as a world when we get there. We got to solve the first one. Sure. You as an investor, inflation, once you have that property purchased and that loan in place, inflation actually is a really good thing for you because your rents go up and your property values tend to go up as well.
Okay. You want to go over the last couple of points then? Yeah,
tax savings is one that not a lot of people think about as well. I love tax savings, and we can do a whole webinar specifically on how the tax savings works on rental properties. You get those sometimes in bonds, you don't get it in gold. And the ease of use. This is the thing that people have clung to, and the reason why most money goes to gold and bonds. It's because investing in rental properties has been hard. Did you think investing in rental properties was hard before you became ingrained in JWB, Pablo?
Yeah, definitely. I mean, especially living in Miami, man. Like I thought it was impossible.
Absolutely. And that's the way that normal people feel, right? That's why we've built everything we do at JWB to make it as simple and as easy as investing in a mutual fund or investing in a share of stock or investing in a bond, right? That's how this is built. That's the service that we can provide that makes this asset class a good option compared to somebody who invests in gold or bonds. So that's really the key right there.
Okay. Well, I think this is a good stopping point. Do you want to kind of answer as quickly as you can Azeem's question? What is the best investment in Jacksonville and price points and offerings in current times by JWB? Or is that like a personal thing where he should just go to chatwithjwb.com?
Well, he can go there to get more information, to chat with the team. So I would recommend that for sure. But why don't we pull up this last slide where we go through a rental property evaluation, and that's going to answer his question right there. Okay. So this is a typical asset that we'll pull up here that this is what investors are buying right now in Jacksonville. This is exactly from a property evaluation that a client recently purchased. So you can see here is the house on Galveston Avenue. And what you notice here is a brand new construction home. Generally speaking, what you're going to find are pricing is between $160,000 and $200,000 for brand new construction turnkey rental properties here in Jacksonville with JWB. And so if you're looking on the right-hand side, you see your purchase price for this one is $193,000. as we go down the line here, beds and baths, it's a 3-bedroom, 2-bath home. Generally speaking, these are going to be 3-bedroom, 2-bath homes, maybe 4-bedroom, 2-bath homes. And they'll have garages, which is always nice for your resident. You'll notice here that it says lease 2 years at a rate of $14.25. This is really critical for folks to know. Properties, when you purchase them through JWB, they're leased at the time that you own them. So you're cash flowing from day one, which is incredible, right? Consistency starts day one when you invest in a rental property. With a turnkey company like JWB, this has a 2-year lease signed on it. So you're producing positive cash flow from day one. You'll see some of the other numbers there: taxes, insurance, HOA dues, property management fees. Won't go so much into depth on that. We can certainly go into those on the client demo. But the point here is that everything is taken into account. And then the returns are at the bottom there. So the percentage basis on this one is 8.7%. This means that from just the net rental income, right, taking in everything into account, all fees, taking in expected maintenance costs, expected vacancy costs, taking in tax savings and principal pay down, which are 2 profit centers as well, you're going to be able to earn you're going to be able to earn an 8.7% return. And generally, assets are going to be producing between a 7 to 9% return on investment. That equates to about a couple $100 a month just from one asset for a very typical property. So hopefully that answers the question there and gives a little bit of clarity there. Of course, I would recommend doing a client demo if you have interest, if you feel like this is something that can work for your portfolio. The client demo is the best way for you to kind of put yourselves in the shoes of a JWB investor and see if it's the right thing for you.
Great. Well, I thought that was a great educational session. I know that, we go over this information all the time. I think that you relay it in a way that's easy to understand, and I learned something different every time. So I hope everybody did. We had about 39 people on the call at one point. Right now we have 30. Azeem seemed to have dropped off, but we can send him that video now. That's the beauty of content. And I want to encourage everybody to continue the conversation with us, right? Come to the Facebook group. The Facebook group's a good time. Greg goes live in there every morning and talks about what he's learning. It's go to jwbrealestatecapital.com/group, and that'll get you in. We'll approve you. And that is our community where we really try to add as much value as we can through content, through networking, things of the sort. And John Avila just asked a question that I think you can answer real quick. He asked, is JWB lending still going strong?
Is JWB private lending still going strong?
Oh, excuse me. He says lending to JWB through IRAs.
Okay. So is the private lending through JWB program still going strong? And can you lend with an IRA? And the answer to both those questions is absolutely yes. The long-term value of rental property investing hasn't changed one bit due to coronavirus. That's how I feel. That's how a lot of people feel. And that's how we're making business decisions. Still going to be able to produce 7 to 9% returns. Still going to get a nice bump from appreciation long-term if you're in for a market cycle, which is how I invest. So once we know that, JWB makes the same types of business decisions. We're buying, we're building, we're selling, we're doing all of these things that we normally would do, and we borrow funds in the exact same way we did prior. So it's a long way of saying nothing has changed with private lending. Private lending is a way for you to lend on real estate projects that JWB then uses those funds to buy and build. And so that program pays a 10% interest rate. And that is a 3-year term that your money is in effect tied up. And many times we do pay back prior to that 3-year term, but no change. And you can do that with your retirement accounts, just like you can invest in rental properties with your retirement accounts. You can also do this with private lending as well. So, yep, great question there, and we're still there.
Outstanding. So thank you everybody for joining. Julie LaPrath Jones had a request here in the question box, which is please do a talk on the tax and appreciation aspects that add a higher percentage rate than the one you presented. We for sure will do it. We are logging all these requests. Every Tuesday at 12:30, we will have some sort of financial education presentation. Most of the time it's going to be Greg breaking down these concepts for you. Every once in a while, we're going to bring in a guest. So if you have guest requests, if you have topic requests, the best place to do it is either join us live on these calls on Tuesdays, Join us live on our Q&As on Thursdays. Those were all specifically question and answer calls where we answer everything live. So if you want to do that, join us on those webinars as well. Join us in our group. We have a million ways to get to us. And if you want your personal question answered, if you have one specific thing of how this fits in for you specifically, go to chatwithjwb.com, fill out that form, hop on the call with one of our guys, and we promise you it'll be time well spent. Greg, thank you so much for all the information today, man. Great job.
Thank you, everybody. It's been a pleasure. See you next time.
All right. See ya.